toolbox with unsecured capital. So the goal today, create as much value for you guys as possible, right? So at the end, I want to try and save some time for questions. As we're going through the presentation, I may ask a lot of the questions that will pop up, but we'll make sure that we save some time at the end to answer anything that you guys have. So please, let's try and save the questions for the end. And if we run out of time, I'm over at a vendor table. Come over and chat with me. We're definitely going to get helped out. So who's MB Capital? Let's discuss a little bit. Tell you a little bit more about us. Who am I? We're going to talk about the funding toolbox concept. Unsecured funding, you know, the money, right? We're going to talk about the money. How do we get different types of money to go out there and do some deals? Tell you a little bit more about how we can help you, and like I said, save some time at the end for that Q&A. So MB Capital Solutions. We started way back in 2009. It's kind of crazy to say that. Back in 2010, I was actually a client. I was in the jewelry business. I was doing cash for gold. So if you sold gold in the Philadelphia market all the way down to the Jersey Shore from 2008 to 2015, probably touched my fingertips. And that's when I was introduced to MB Capital. You know, my now business partner, Eric Moss, put in place a $100,000 line of credit for me that completely changed my business. You know, in that business, much like real estate investing, I could never have enough cash. Right? You know, as soon as something came in, I bought it up, but then something else would come in behind it. Much like real estate, right? Like we get a property under contract and then we see 3 others that we want. Same thing. We want to start building up capital so that we don't miss out on those opportunities. You'll hear me say the word opportunity a lot, you know, especially for us as real estate investors. We have to be opportunistic. That's how we make the most money, right? It's when we're prepared to pull the trigger on these opportunities as they come up. So the more we can build up capital, have our resources in place, when those opportunities do present themselves, we have the ability to take advantage of it. You know, our office is in Turnersville, New Jersey, but we are nationwide. You name a state, we're helping a client there. We work with a lot of the education companies. You know, your Pace Morbies, everybody you're seeing on Instagram. A lot of them send their students to us so that we can get them money to go out there and do deals. We want to position you not just for short-term success, right? Like, let's go get you some money to do deals now. But then let's also make sure that you have capital to keep doing deals. You know, I meet tons and tons and tons of investors over the last 10 years. And some of them are in the business and out of the business quick. So if that's what your goal is, let's make sure that we're preparing you for it. But then if the goal is to do deals and grow and scale and do this long term, create that passive income to where this is your full-time job, we want to try and prepare you for long-term success. It's not just, let's do a deal now and get a quick pop of income. Let's try and make this a business long-term so that we can get out of whatever job we're in, and just focus on building real estate. You know, I have 12 rental properties in the Philadelphia market. I could leave a daily basis job if I wanted to, but I like helping real estate investors. So we're growing this business to be able to do that on a daily basis. But we want to give you guys the ability to do both, right? Focus on real estate or do many things at once. The more capital we have at our disposal, the easier it is for us to do that. That handsome gentleman, that's me. I'm Nick DeFederico. I'm the lead strategist here at MB Capital Solutions. Like I mentioned, I'm a real estate investor as well, buy and hold rentals in the Philadelphia market. But most of my day is spent helping real estate investors all across the country get access to capital so that they can go do deals on their own. You know, like I mentioned, I was originally a client way back when Eric started the business. I'm now a partner in the business. You know, I enjoy helping real estate investors get access to capital. You know, it's become sort of my favorite thing to do is watch others have success in real estate. What we found is most people need cash, whether you're new or established. The more cash we have at our disposal, the more deals we can go do, the more money we can make and give ourselves that flexibility. I have 3 kids. I'm happy to be away from them today. And I know it's Father's Day tomorrow, but it's good to get a break. So quick question, who here in the room has a funding toolbox? Quick show of hands. Nobody. Nobody wants to lie and just like cheat and just say, yeah, I got one. Like it. Dana. Dana has a funding toolbox. The truth is, everybody here in this room has a funding toolbox. You do. I'm going to show you in a second. And the reason we came up with the funding toolbox concept is because people would say all the time, I don't have access to funds. So what we've learned over the years is there's many different ways to fund a deal. right? And more importantly, you may have resources at your disposal that you can use right now to go fund a deal. Everybody thinks you need cash and go to a hard money lender to get into a fix and flip. The truth is, there's many, many different ways that we could fund a deal. The sooner we realize what we have at our disposal, the more options we can go look for, the more deals we can go look for, the more ways we're going to have to fund that deal. And what I've learned and why we created the funding toolbox concept is most people are a creature of habit, right? However you may fund your first or second deal, people think that's how you have to fund each and every one of your deals. When the truth is, we can use all these tools together in conjunction with one another to go get a deal funded. So it doesn't have to just be cash and a hard money lender or a private money lender. We can use residential and commercial loans. John Palumbo was just in here a little bit ago talking about ways to leverage commercial loans and residential mortgages to go do a deal. Lines of credit, which we'll talk about today, 401k IRA money. We have those old W-2 income jobs where we have old 401k sitting there. A lot of times we can roll that over into a self-directed IRA and actually go invest in other people's deals and invest in real estate with it. So if we have those old W-2 jobs where there's 401k money sitting there, there's ways for you to leverage that. Hard money. I always make the corny joke, they should really call it easy money, because if the deal makes sense, every hard money lender is going to fund it. As long as you have that down payment money or the other tool to finish out the deal, you're going to be able to get that deal funded. Credit cards. Anybody here use a credit card to fund a deal? Not one person. You're like, yeah, maybe.
I spend all the money in renovations.
Yeah. So you pay for renovations with credit cards. Perfect. That's a way to fund the deal. It's access to cash. And we're going to talk a little bit more about credit cards today as well. HELOC, especially right now with the value of properties going up, whether it's primary or investment, we all have equity in our properties right now that we could tap into. Put a HELOC in place. I don't necessarily know that that's the first place you want to be going. I'm a big believer in leveraging business money first, which we'll talk about. But if we have equity that we can tap into, have it in place, have it ready to go. Now's the time to get it and have it. Because I found that more times than not, when you actually need to tap into that home equity, you can't get it because you may have tapped into personal credit first or just made things a little bit difficult. So if we have equity in our properties, let's tap into it. Let's have it sitting ready to go. Personal loans. Personal loans are another tool. I use personal loans strategically for clients. It all depends on the situation. Every other week, I feel like I get a call from a client who says, I'm under contract, I need to close in 7 days, and I need the down payment money. Don't be like that. If you are like that, and there's a deal that pops up like that, and we have W-2 income, a lot of times we can get you a quick personal loan to make sure that you don't miss out on closing. Client 2 weeks ago, similar situation, needed $40,000 to combine with a hard money lender, Matt, who I mentioned over at Alpha. Because he needed to move quick, we were able to get him a $50,000 personal loan. He used the personal loan in combination with Matt to go 100% fund the deal and hold on to his cash. A lot of times we'll use personal loans for strategic purposes. It's not always the first place you want to go, but there's always ways to get creative if it does present itself. Cash, cash is king. I'm a big believer in hoarding cash. Sounds funny to say, like who doesn't want to just hold on to their own cash? But most people spend cash first. It's the easiest thing to spend. It's quick, it's easy, let me just use cash. Typically, at least what we found is when you use cash first, if you need to try to acquire any other tools in the toolbox, it may be too late. Because once you use cash, most people will go to personal credit, right? Leverage personal credit cards, it impacts credit score, it impacts our ability to be able to get you some of the business money. So let's hoard cash, let's leverage the other tools in the toolbox, because typically that's going to put us in the best position. And private money, right? Private money, we got friends, family members that see what we're doing that just don't want to swing the hammer, but they're sitting on cash. I'm happy to give them, 10, 15% to leverage their money to go make income for me. So private money is another awesome tool. If you have family members and friends seeing what you're out there doing and they want to give you money, take it. Give them the return, but to have that extra cash, you'll find a way to use it. The real reason we highlight the funding toolbox, though, is you can use all these tools in conjunction with one another, right? Like I can use credit cards and a hard money loan. I can use a private money lender and cash. I can use HELOC and credit card. You can use them all in conjunction with one another. So the sooner you realize what tools you have at your disposal, the easier it is to go out there and start looking for deals, right? So hopefully that resonated. Hopefully you're thinking of other ways or other areas where there may be cash sitting that we can use. Because once you realize this, that there's more than one way to fund a deal, you can really get out there and scale the business. So now I'll re-ask. Quick show of hands. Who here has a funding toolbox? All right, more hands. That's what I like to see. Next time you see me speak, you can cheat. And when I asked it first time, you just raise your hand like Dana did. But hopefully it makes sense because the more options we have, the more deals we can go do, the more money we make, the faster we can get out of that W-2 job and do what we really want to do. So today we're going to talk about unsecured business money. So what's an unsecured business line of credit? Essentially what we're doing is we're leveraging the strength of our personal credit profile to get funds under the business name, right? So these are with lenders nationwide, your large institutional banks, credit unions, community banks. All banks have a certain unsecured product. The question is, how do we acquire it? And a lot of times it's leveraging the strength of personal credit to get those funds under the business name. Kind of like when we go apply for a personal credit card, lender looks at our credit profile, they're going to give us an approval based off of that. It's the same thing on the business side. We'll talk a little bit about the different types in a moment, but as long as we have decent personal credit and we have an LLC set up, there's ways for us to leverage that to go build you up capital so that you can go out there and take advantage of opportunities. So the unsecured part is just we're not leveraging a property. We're not putting liens on assets or anything like that. Again, strength of personal credit, but everything's issued under the business name. So building business credit to building access to cash inside your business, they're two very different things. I really like talking about the difference because especially today, in this Instagram world, social media world, there's a lot of misinformation out there, right? Like, oh, we'll go get you $250,000 of business credit, not realizing that a lot of that business credit are store cards or vendor trade lines. So what we do is we build you up with business capital that you can use as cash. Like everything that we implement, you can use to go fund a deal. This is your traditional business credit building, right? You'll see the Staples cards, the Grainger, Home Depot. That's what most people do to build their business credit, right? And I always make the joke that I have a $25,000 Staples card, but if I only need to buy a shitload of pens and paper, like I can't take that to closing with. So what good is it? Yes, it helps build my business credit score, but it doesn't give me cash to go close a deal. So while we do recommend building your business credit, go get those net 30, 60, 90-day accounts. Go get your Home Depot card. Go get your Grainger card. Again, it doesn't help us to go close a deal. Will it help build your business credit score? Great. Majority of us are real estate investors anyway. So building an 80 pay dex and our DMB score only goes so far for us. More of what we're going to be able to do is leverage personal credit to get the cash access that will still build business credit anyway. So for us as real estate investors, if you are doing business credit building, great. You're not wasting it, but let's focus on getting you cash so you can go out there and do deals. Don't spend 6, 9, 12, 18 months building business credit before you decide to go do a deal. There's ways for us to get you money right now so that you don't miss out on those opportunities. So that's business credit building. Again, today we're going to talk about access to cash to go do deals. So there's really three different types of UBLs, and a UBL is that unsecured business line. The first two I'm going to talk in conjunction with one another. The first is that traditional checkbook line of credit, and the second is that streamlined line of credit. The reason I talk about them together is I kind of compare it to a mortgage, right? Your traditional line of credit is that standard residential mortgage where you're going to get fully underwritten. Lenders want to see financial statements. They want to see 2 to 3 years of personal and business tax returns. They want to see 2+ years of history. It's a full underwriting process. And typically at the end of it, we can expect anywhere from 10 to 15% of the revenue that we're shown on our financial docs. So if we're doing $50,000 a year, we're going to get anywhere between $50,000 to $75,000 on a line of credit after giving all of our financials and blood samples, all that fun stuff that nobody wants to do. Whereas with the streamlined line of credit, think of that old school, almost no doc loan back in 08, 09. where lenders gonna look at personal credit, they're gonna look at the age of our business, and every lender has a certain sort of threshold that we can apply up to where they're not gonna ask for financials, right? You know, some lenders, anything over $50,000 or $75,000, they're gonna wanna see 2 years tax returns, bank statements, do full underwriting. So where we come into play and how we can get strategic is if that lender will allow us to apply for $45,000 without showing the docs, if we don't have docs or if we're showing a loss or we're just not as bankable, we can still get money. It's all about knowing the lenders and what the criteria is. You know, so with the streamlined lines of credit, that's typically where we're gonna work for most of our real estate investors. Because again, we are high risk industry. So most banks don't like us right off the bat. Anytime we tell a bank that we're doing fix and flips or buying holds, they want to give us money. If we say we're doing real estate consulting, they're okay with it though. So it's all about how you position yourself to the banks. The reason I talk about the traditional lines of credit in conjunction with it is we've learned that most real estate investors have a different type of business as well, right? Like I'm working with fix and flippers, buy and holders that also have a pediatrician practice, a hair salon, painting business, construction business. A lot of times we can leverage that other business that may have full financials to go get you even additional money, right? Like plumber last week, we got him a $150,000 line of credit using the plumbing business. We're still gonna go get him $50,000 on a line of credit using his real estate business. So the more access we can have, the more options and the more deals we can go out there and find. I love the streamlined line of credit. There's nothing better than 7 to 21 days, letting them look at credit, letting them look at my financial docs, and then having a $50,000 line of credit sitting there waiting for us to go. There's no restrictions on the use of these funds, right? This is working capital in the business name. It's not deal specific. We're not underwriting your flip or your burr. You know, this is based off of you, your business, and your credit. So let's get these implemented, because then you can go out there and essentially use it for whatever we want, which I'll go to in a few minutes here. What's that? That's on you. Don't tell me about it. I don't want to know about that. I'd rather know that you're getting into a deal where you're going to go make some profit, take the profit and buy the car. But you'd be surprised what some people do. But both are a great tool. I have a lot of the streamlined lines of credit implemented, not so much of the traditional lines, because again, I like quick, easy turnaround. The less docs I got to give, the more money I can get. And we can always get creative by getting more than just one line of credit, right? You know, me personally, I have over $700,000 of access between the streamlined lines of credit and the third option that I use to fund my deals. So I can either completely fund one whole deal or have the options to take that money and combine it with a hard money lender and do multiple deals at a time. The more capital we can build up, the optionality we can give ourselves. I can do one at a time, or again, if I have the opportunity and I can find multiple deals at once, let's use that as the down payment money and combine it with another tool in the toolbox to go do more deals at once. The more deals that we can do at a time, obviously the more money we're gonna make. Make sense on lines of credit? Yeah. Interest rates on the line of credit, you're talking prime plus somewhere between 1% to 4%. Prime right now is at 7.5%. So 8.5 on the low end, 11.5 on the high end, interest only payments while we're using the money. So it doesn't kill us cash flow wise while we're doing a deal, but it's a perfect tool to get in and out, service our debt while we're doing the deal, and then have the exit, whether it's the flip or the refinance, to pay down the line of credit. Because then you still have the access to go do it again. That's the key. Let's start building you guys up with permanent capital that once you pay it back, you don't lose the access to it, that you can leverage over and over again. Now, the third one is credit cards. Now, when I asked who here has funded a deal with credit cards other than renovations, nobody raised their hand. Who here knew you could actually go purchase a piece of real estate with a credit card? Couple hands, good. Most people just don't know how to do it. The good thing about credit cards, this is where a lot of our newbie investors typically will start, right? You know, I talked to a couple people today, brand new LLC, just getting started, but I have no cash. If we have decent personal credit, we're gonna be able to leverage that credit to get business credit cards that we can actually use to go purchase real estate. And what's great about it, again, it could be a new or an existing business, so day old or 10 years old. If personal credit's in the right position, we're gonna get you money. No financials, no collateral. It's personal credit, and that's it. As long as we have the LLC implemented and they're gonna approve us, they're gonna put it under the EIN number. And the benefit there, when I keep talking about putting it under the business name, is that it won't report back on our personal credit report. So go leverage the shit out of the money. Go use it for anything and everything we can. Keep ourselves bankable on the personal side. You know, me personally, right now, I'm using a little over 200 grand of business lines of credit, business credit cards. Not $1 of that shows on my personal credit report. So when I need to hit my refinance, I get best terms, rates, because again, I'm bankable and lendable on the personal side. Lender doesn't see all the money that I'm carrying in the business. We're gonna save questions for the end. I only have a few more minutes. The true benefit and why we like the credit cards, 0% interest, anywhere from 6 to 21 months. So for us as real estate investors, it is a game-changing tool. It is a powerful tool to be able to get into a deal, not using our own cash and leveraging a 0% credit card, knowing that we at least have a year to hit our exit strategy. So that when we flip the property or do refinance and pay down those credit cards, the true game starts then, right? Because we're gonna coach our clients on how not only just to use it right the first time, but then when we pay down those credit cards, these lenders are gonna keep giving us 0% promotions on some of the same cards. Has anybody ever transferred a balance on a personal card, and then as soon as you transferred it, that other card gave you another 0% promotion on it? It's the same thing on the business side, right? So when we use these things responsibly in the right way, listen, there's a couple credit cards over the last 10 years I've never paid interest on, because I've either used the refinance money to pay down the credit card, or I've taken my traditional line of credit or streamlined line of credit and just paid off the credit card and wait for that 0% promotion to come in and then re-access it. And you're probably wondering, all right, why do they keep giving you 0% promotions, right? Well, there's two reasons. One, they're a credit card company. They need to hold your debt. That's the whole reason they give 0% promotions to begin with. But the real reason is they know, statistically speaking, 90+% of people that use 0% promotions typically can't and won't ever pay it off. So when you use it right the first time, they're like, all right, let me give him another one, because statistically speaking, he's not going to be able to pay it off. But we're not going and getting involved in bad debt. We're putting it into a deal where we have an exit strategy. That's the key, right? I was one of those kids where my grandfather made me do all the projects around the house with him. I was the hold the flashlight kid. But one of the key things he told me is when you're done a project, you put your tools back, even if you're going to go do another project. It's the same thing with your funding toolbox. So when you do that refi or you do that flip and the funds come back, pay down the cards, pay down the lines of credit, because the lenders are going to give you increases, but more importantly, they're also going to give us those 0% promotions again. Credit cards are an unbelievable tool, right? You know, again, I have lots of access through the lines of credit. I start with my credit cards first, because again, you can't beat 0% interest. You know, that's more money on your deals that's going right into your pocket. If you don't have to pay private money lender, or even if you're saving money on a hard money loan by using more of your own money, it's more money going into your pocket. So credit cards for our new, even existing businesses, again, powerful tool. I can't tell you how many clients will call me and say, Nick, I just opened up another LLC, let's do more credit cards. You know, that's how I've been able to build up that amount of capital. I've gotten strategic using me and my wife in different LLCs to build up capital in each of them so that I have it at my disposal. So we're gonna show you how to do the same. But 3 really good tools. Does that all make sense? Perfect. All right, so us as real estate investors, how can we leverage this money, right? The lines of credit, the credit cards, what can we do with it? EMD, right? We got to put earnest money deposit down. We got something under contract. We need 5, 10 grand to lock that up. Leverage the credit cards or the lines of credit. You know, don't use cash. Anybody here familiar with Gator lending? Quick show of hands. Couple. All right, so Pace Morby has created this whole thing called Gator lending, right? And essentially what it is it's a wholesaler who got a property under contract that doesn't have the money to put down for the EMD. So as a Gator lender, I could lend you 5 grand for your EMD, and when you sell that property, I want $7,500 back. Don't be a wholesaler that needs to give away $2,500 of profit because you don't have 5 grand as EMD. If our personal credit's in the right spot, we can get you cash to use as EMD money. Or you become a Gator, right? We can get you 50, 75 grand worth of money. Go lend on other people's deals. There's always ways that we can get creative in finding ways to make money in real estate as long as we have the access. So earnest money deposit. Let's not use our cash, let's use a tool. Down payment money, this is the most common one. You have something under contract, hard money lenders giving us 80% of the purchase, all the rehab funds. Leverage the lines of credit and credit cards as that 20% down payment and closing cost. Truly go 100% fund your deal and hold on to your own cash. Like I mentioned at the beginning of this, Matt's going to be talking next. We have a program with Alpha Funding where you can take our money and go leverage with them and 100% fund the deal and hold on to all of your own cash. You know, some hard money lenders, and I talk to hard money lenders across the country on a daily basis, explaining to them how clients are using credit cards. So we kind of can help there if hard money lenders don't get it, but Alpha gets it, right? We've done hundreds of deals at this point where we've gotten them 0% credit card money or a line of credit to combine with them to go 100% fund the deal. So down payment money, if we have cash, great. If we can get a tool to replace it, even better. Rehab money. I get a call every week from somebody who just closed on a hard money loan and didn't know they needed to kick off their rehab to get to the first draw point to get their draw from the hard money lender. You know, so let's make sure that we have access to where we can kick off our contractor, get them on the job site, and get them to the point where we can at least get our first draw. I'll have some other investors that won't take a draw from their hard money lender whatsoever. Leverage the lines of credit and credit cards. You're saving on points on the rehab money. You're saving on interest on the rehab money. Acquisition costs at closing, whatever it may be. If we got to do, pay a wholesaler, we got to pay for appraisals, we need cash. Let's leverage the tools that we have in our toolbox. Monthly holding costs, like I mentioned with using Alpha, a lot of times we can use the credit cards or the line of credit, not only to service the credit cards in the line of credit, but then also to service Alpha and the hard money lender while you're doing your deal. So instead of using cash flow to service the leverage that you're using, let's leverage the tools that we're already using in the deal. Truly 100% fund your deals here. The acquisition, the rehab, and the holding. Most people forget about the holding cost. Don't scramble around looking for cash. Start to build that toolbox so that you have the access. Emergency funds. Ever since COVID hit, I talk about emergency. The game completely changed if you're investing during COVID. I'll always tell the story. I had an investor who was expecting a $30,000 draw from his hard money lender. His hard money lender called them and said, hey, because the servicing money behind us changed the rules on us, we're going to change the rules on you. So now you need to have more in reserves. So instead of getting a $30,000 draw, they only gave him $9,000. That's $21,000 difference. If his credit wasn't in the right spot and we weren't able to go get him a quick $25,000, he would have let that property sit and maybe would have taken a loss on it. So let's make sure we're building up these tools so that regardless of what may happen, we have emergency funds. I had a client I talked to a couple of weeks ago. Her husband had a heart attack and needed, all kinds of surgery. If she didn't have credit cards to give her kids to be able to go finish the deal, it would have just sat there dormant and she would have taken a big loss on it. So things always pop up. Let's have access to cash so that we're not scrambling around when it does happen. And then just general working capital, right? Whatever it may be, we're gonna need cash for stuff, marketing materials, building out our business, floating money. Let's just start to build up cash in our business so that we don't have to, hit any roadblocks and more importantly, slow down business. All make sense? Perfect. So I just talked about the different types. I just talked about the different ways to use it. How do we get it? What do we need to look like? Again, it's all personal credit driven, even though everything's under the business name. So personal credit positioning is key. You're going to ask me what my credit score needs to be. I'm going to tell you I care more about your credit data than just your score. You're going to say, Nick, I don't care. What's the score? I'm going to say around a 680 to 700 score is what we're looking for. That's sort of your foot in the door to have some options. But we're going to look at the data more than just that 3-digit score, because what we can do is manipulate credit. And I don't mean it in a bad way, but depending on what you have going on credit-wise, we can fix it. So when you meet with us, yes, we're going to learn more about you, what you have going on. We're going to look at credit, but it's not as so much as approved or denied. It's either, hey, we can go get you this amount of money now, or here's the game plan. If you do X, Y, Z, then you'll be in a position to get that money. So if we have credit issues going on, or if we have unique situations, we still may be able to help, and at the very least give you the game plan on exactly what you need to do to get in a position for money. But this is what we're looking at. Age of history, how long have we had credit? Most lenders on the business side want to see that you've been able to manage credit on the personal side for at least 5 to 7 years. So if we don't have 5 to 7 years of history, if we have a family member, friend, relative that has an older credit card, a lot of times we can just get added as an authorized user to bump up our age of history. Talked to a client yesterday. He's 18 years old, getting started in real estate, but he's a fetus, right? He's got no age to anything. He doesn't even have credit. So we're gonna have to build up his personal credit to get the business money, and a lot of that is adding authorized users to mom and dad's credit cards just to get the history. That's how you'll see an 18 or a 19-year-old with 25 years of credit history. It's all the authorized users' history that's coming over, but the lender sees that. Inquiries in the last 6 to 12 months. Inquiries may not matter for your hard money lender or mortgage or, to go get an auto loan. For what we do, however, inquiries do matter. Because again, it's unsecured. So anytime a lender sees more than 3 inquiries in the last 6 months, typically you're gonna get denied. Because the lender starts to wonder, all right, he's having his credit pulled a lot, or she's having her credit pulled a lot. Is there something going on in the financial life that just hasn't hit credit yet? So anytime we have more than 3 inquiries in the last 6 months, we do have a resource that can get inquiries deleted. So if you're sitting here, you're like, yeah, shit, I had my credit pulled like 20 times in the last 6 months. There's ways for us to get those removed. His name's Tom. I don't know if he's got a girlfriend at the credit bureaus or whatever, but every time we send somebody to him, he sends them back clean. I had a client the other day, got 20 inquiries removed in 7 days. That's big when that client's looking to get money to go do deals. Whereas if you didn't get them removed, we're not going to be able to get them money. Derogatory information, that's your bad stuff. Collections, charge-offs, bankruptcies, if we have them, let's get them removed. Be proactive about getting that stuff off. Even if you have paid collections or old charge-offs, you don't have to wait 7 years to let them fall off naturally. There are credit repair sources that can go out there and get those deleted pretty quickly. So if we have credit issues, let's get you set up, let's get you taken care of. Overall credit utilization. So how much do we have in limits versus how much are we using? Most lenders want to see that you're under that 30% utilization mark. And then in terms of your credit score, anytime you report over 30% is when you're going to see your biggest drop in credit score. Conversely, when you come down under 30%, that's when you're going to see your biggest pop. So we want to be using under 30% of our total limits. That's something, especially right now with a lot of lenders being a little bit tighter, that we're making sure everybody's under 30% total utilized before we're submitting applications. So if we have $10,000 of total limits on our credit report, let's not be using more than $3,000 of them. Number of current trade lines, the limits and the history of those trade lines. I'll talk to clients all the time and they'll say, hey, mom, dad, grandfather said I should only have 1 credit card. And that may be true if we're not a business owner or an entrepreneur trying to build up business capital. Because most lenders, when they're trying to give you money in the business name, want to see that you've managed 5, 6, 7 credit cards on the personal side. More importantly, they're going to look at the limits and the history of those trade lines. On your credit report, it shows how much you've used your credit cards up to as your high pass balance. So if you have $50,000 in credit card limits, but you've never used any of it, business lenders aren't going to give you a lot of money. So we actually want to leverage personal credit so that we can build up the profile and show the track record of being able to pay it down under that 30% without getting any of the bad stuff. If we can do that and show lenders that, they're going to throw business money at us. So definitely, if we're using personal credit, let's get it paid down. If we're not using personal credit, let's use it a little bit. Let's get it to report with the high pass balance and then pay it off, because that's drastically going to help not only your credit score, but then your ability to get business financing. Again, 700 credit score is typically what we're looking for. If we're under that 700, we're going to give you the game plan as well. So how do we get started? That QR code there is to get pre-qualified. I come to these events all the time, not just these, but a lot of the national events. And a lot of people get paralysis by analysis. You got a lot of info today. Take 1 or 2 or 3 things that you see today and take action on it. This is one of the ones I always say, take action on it. Scan the QR code. It does do a soft pull of credit. It's not a hard inquiry. It's a soft pull, doesn't impact credit score. But let's at least give you a game plan. Let's show you how much capital is out there for us to go get for you now. Or if you do need credit tweaks, let my team give you those tweaks so that you know exactly what you need to do to get the money. After getting pre-qualified, we're going to have a funding consultation. We're going to learn a little bit more about you specifically. What are our goals, short-term and long-term as well? Do we have partners? How's our business set up? And then we're going to tell you exactly what options we're going to have, how much capital we can get for you, or if we do need to make those tweaks, the resources to make those tweaks. And then we handle everything, right? We work with the lenders, we work with the underwriters. You know, you guys focus on finding deals. We're gonna go get you the money.